Hey everybody. All right, welcome back to Walks on Wall Street. Hopefully you all are doing well and had a fantastic Thursday. It's about 9:04 p.m. It's about 51 degrees too. It's actually a really nice day. Now I can't tell you guys how excited I am for the spring and the summer. I mean, man, it was a gorgeous day today. I mean, this was probably the first day in a long time in New York where it actually felt like a spring day, and there was tons of people walking around too. It was really nice. But anyway, markets reacted very well. And I think what we're going to talk about tonight is the distinction between the major equity indices. So if you actually take a look, we're going to take a look at the triple Qs tonight. This is the ETF, the Invesco ETF that tracks the NASDAQ 100. Now there was some really positive price action here, along with some huge volume coming in. So this is actually some bullish action. I think we closed at about 306.81 on the triple Qs. But the more promising news is that we are now trading back above the 200 and 50-day moving average. And there's a technical sort of indicator and a technical saying that is actually coming into place now, and it is called a golden cross. And essentially what that means, it's when the 50-day moving average cuts back above the 200-day. Now, if you look at a chart of the triple Qs, if you go to tradingview.com, if you pull up your Bloomberg terminal or MarketSmith, if you put a 50-day and a 200-day moving average on there, what you'll see is that if you look back to February of 2022, specifically on the 28th, that is when we had the 50-day cross back below the 200-day, and that led us all the way down to a very significant drop in this market. So it's very positive to see the moving averages actually turning up towards 12 on a clock face. So that is actually very encouraging action. If we take a look at the bond market, I'm actually going to put this link in the chat so all of you can see it. Let me post it here now. So I just put in the chat cnbc.com/bonds. Once again, cnbc.com/bonds. And the bond market, in terms of the yields, it actually recovered a bit today. We had a little bit of a sell-off in the bond market. I think this week has been some of the most volatile times I've ever seen, at least in my investment career, in the bond market. You know, we have that 10-year U.S. Treasury yield trying to rebound again. We're at 3.594%. But look at the short end of the curve. This is really stunning here. Take a look at the 6-month. The 6-month is over 5%. I mean, the yield curve is really screaming some not so pleasant things, really signaling a recession. But if we take a look at that 10-year, if you go to US 10-year on TradingView, we actually came all the way down to 3.3%, right? And then just on Thursday, we were knocking on 4% store. So yields are actually responding, and yields are coming back, trading around 3.5%. We are going to be headed downtown tonight, probably around 34th Street, Penn Station. But I think I want to walk all the way down Broadway tonight. Maybe we'll even run into Times Square if we're lucky. So let me say hello to everybody in the chat. I see Austin City Limits, Jack S. is here, Brian Colleen, 45, Tiffany Allen, British Greg, good to see you. Vivian is here, welcome. Gregory by the book, EBITDA, good to see you. NG, Patty Benty, and much more. Ren 1018, good to see you guys. Now tomorrow, we are actually going to be hearing from the University of Michigan as they release their Consumer Sentiment Index. You know, I'm going to really attribute this one as sort of a misread. And the reason why I say that is because so many events have taken place. I'm really referring to the big collapse in the banking sector. So I wouldn't be surprised if this time next month we actually start to see consumer confidence drop even more, because I think consumers were really rattled by what has been going on with the Silicon Valley Bank situation. Hey, Joe Driver's here. Says hello, Tom and team. We are living in extraordinary financial times. We really are. It's kind of crazy, but we're reporting live here from Columbus Circle. We're overlooking Billionaires Row. It's finally a gorgeous, gorgeous night out. And it actually got up to a high of 60 degrees today. I was walking around in Central Park for a little bit on my lunch break, but now it's 51. You know, spring is finally here, thank God. I think we're all sick of the snow. Chris Beeman is here, says howdy all, and Tom, good to see you. Chris, Hawaii says it looks like a very nice night in New York City. It's a beautiful night, beautiful day. You know, another thing I gotta mention to you guys, and I think we briefly talked about this yesterday, today is March 16th. And that is a very significant day because on March 16th of 2008, into one of the other banks on the street that may be failing as well. So I tweeted something. I said, look, if they close the deal today, which they didn't, but if they close the deal today, this would be the second time that JP Morgan Chase bought another bank that failed on March 16th. So March is definitely not the best month for the banking sector. We could say that. Hey, Austin City Limits says, welcome viewers from Argentina. Yeah, we have a ton of viewers from Argentina, especially when we're doing these live streams in Miami. Before we head down Broadway tonight, everybody, I will point out Deutsche Bank. This is the Deutsche Bank Tower, but there's also a really nice 5-star hotel in this building. It is called the Mandarin Oriental Hotel, 5-star hotel, and rooms can go up for $1,000 a night, if you could believe that. I think competitive rates are at the Park Hyatt, but right now we are looking at the Trump International Hotel and Tower right here. Even though this is a 5-star hotel, room rates are a little bit less expensive. You could probably get a standard room for about $560, maybe $700. Even though that's still expensive for one night, you are in prime real estate here in New York City, Columbus Circle, right next to Billionaires Row. Sandra is here. Good to see you, Sandra. Thank you for joining. Lemonade, welcome. Brian says March Madness back in 2008. Yeah, well, I mean, what do you guys think? Because, you know, markets are actually responding very favorably. And we were discussing this last night, and if you really think about the lending operations of the Federal Reserve now, right, they're going to be buying the bonds of distressed Silicon Valley Bank at par value. This is technically quantitative easing, right? This is technically QE. So I think markets are responding very well to that, and this is all coupled while rates are actually going down, and they've fallen significantly, and that's why I believe we've actually seen outperformance on the NASDAQ this week. We'll see how the week closes tomorrow. We'll see. Hey, sunshine after rain. Good to see you. Welcome to New York on this very warm night. Thank God. Malcolm is here, says CSI means little now. What will Powell do with all these bank crashes? Well, there's something called the cockroach theory that we've reviewed multiple times. And essentially the cockroach theory states that whenever there's a major calamity, you can rest assured that there's probably going to be multiple others that follow, right? It's sort of, you know, if you're taking your kids, to look for an apartment in college and you see a cockroach crawl out. Oh, maybe this is a little fender bender here. You know, if you see a cockroach crawl out from under the kitchen, you know, you could rest assured that there's probably 20 other roaches behind there. So, I mean, we've actually seen this, right? If you think about it, you first had Silvergate, right? That was the first bank that actually fell. And then you had the very notable Silicon Valley Bank, which was really posterized because the clientele that it dealt with was, you know, all venture capitalists. Plus, there was about $40 billion worth of withdrawals in one day, which is enough to crash any bank. And then you had another New York bank that went under, and there's regional banks that are teetering on the brink, let's just say that. Right here we are on the corner of West 57th Street and Broadway. Tonight we're going to be walking directly down Broadway though. Hey, Tom AK is here. Good to see you. Thanks for joining us. DJ Review in Under 2 says, hey Tom, how was your day? My day was good. I had a really, really good day. The weather finally improved after, multiple days of teeming rain and freezing. Hey, Joe Driver says, Tom, another reason not to own a car in New York City. New York City Council wants to charge $30 a month to park on the streets. You know what? I think I messaged one of our moderators about that, Dan Zhang. I was going to ask you guys that. What do you think about that? So I think there was some politician. I wasn't really following it. I just got I think I read the article on maybe the New York Post. But there's going to be two things that I think are going to impact New York in a negative fashion. And the first one is the congestion pricing. Now, what do you guys think about that? And from what I understand, the congestion pricing is if you drive in Midtown Manhattan, you're actually going to have to pay a toll now. I'm not sure when they're going to roll that out. But number two is they're throwing around the idea, right? I don't know if it's implemented yet, of a parking permit. So if you want to park in New York, you have to pay some sort of a monthly fee to have a parking permit. I think that's going to really, really impact a lot of people, a lot of working class New Yorkers, let's say. I don't know. What do you guys feel about that? Richard Vogel says, what a ripoff. Yeah, I really am against the congestion pricing, but I have heard a couple of interesting arguments about the parking permit passes. Michael Joseph says, yes, they're trying to roll out an app for park spot sharing. Interesting. Richard Vogel says, not a good idea at all. Western Mass Dave says, is that for residents? What about visitors? Well, from what I understand, and I believe the politician that is trying to bring about this parking pass is that from many of the residents, he gave an example that live on the Upper West Side, for example, which we were actually walking on the Upper West Side last night. You notice all those beautiful brownstones, right? And the Upper West Side, I told you guys, a lot of people choose to live on the Upper West Side that have kids, right? So if you have kids in the city, chances are you probably have a car. Now the problem is the residents, you circle the block for sometimes an hour and a half, 2 hours, just to find a parking spot, and it is very, very tedious and cumbersome. I mean, I've done it before. You guys know when I was a teenager, I actually used to work at a rental car place when I was like 19, and my God, is it hell on earth trying to find parking. You could circle for hours and hours and hours. So maybe this parking pass would provide residents, first come, first serve, because if you live in Manhattan, you're more likely to purchase the parking pass, but it just seems like another tax. I don't know. Zay Batata says New York City wants to be an exclusive playground for the rich. It would be like Dubai, which is not a good thing. Now, I originally thought that too. That was my original thought because, guys, how much more, taxes could New York take? In addition, because I'm trying to, think about the article as we're walking and talking here. I'm going to read as many chats as possible. You know what they also said, everybody? And I think we predicted this live right here on Walks on Wall Street, which was kind of crazy. Allegedly, the parking passes are going to be sold in order to fund the MTA. Now, do you guys remember me talking about this? Oh, hold on, let me point out this building. Let me cross here. This is one of my favorite buildings. It's right on the corner of Broadway here. I think it's actually a hotel, but check out the gorgeous architecture. Really, really stunning. But the parking passes are going to go to fund the MTA. And the reason for that is because ridership on the subways are down still, even from the pandemic. And we've talked about why, right? We've talked about some of the reasons why ridership is down. And the main reason is because of remote work. Maybe you're coming into the city 2 to 3 days a week instead of 5 days a week. I'll give you guys a little anecdotal example here. So my old boss, she lives in Port Jefferson, which is a very nice location out east on Long Island, for those of you who may be unfamiliar. But she only comes to the office now 2 days a week. And she doesn't take the Long Island Railroad. She chooses to drive. And she parks her car in one of the parking garages and just expenses it, right? Maybe it's $50 a day, $100 a week. You could expense that on the T&E. And, think about how many other people, like my old boss, are doing that and not taking the subway. So the city is going to try to find every little thing they can do to try to store up additional tax dollars to keep the MTA running. It's going to be interesting to see how this plays out. Hey, Malcolm is here. Says, but New York ain't London. New York is iconic. It definitely is. Hey, Vivian is here. Welcome. Good to see you. Michael Joseph says, yes, the money for the MTA, so it is a tax on car owners who don't use trains. It's unreal. I mean, I think we predicted this. It's going to get wild to see what they do. TC says, New York City needs to focus on increased crime instead of trying to find creative ways to tax. Joe Driver says, what about the MTA needs more money? I mean, yeah, you'd be surprised. Now, if we want to sort of tie this into a financial conversation, the MTA has a ton of pension liabilities. And, that is why, working for the MTA is a very coveted job. Lots of pension liabilities that they need to have funded. Anyway, guys, this building right here is totally vacant. It looks horrible, but I'll tell you why. This actually used to be the headquarters of Bad Boy Entertainment or Bad Boy Worldwide. And I believe that is the record label for Sean Combs or P. Diddy. And if you look closely, I think they still have the signage up. Let's see, if you look right here. Yeah, they still have it up. Now, man, I think, and thankfully to a lot of our viewers here at Walks on Wall Street, we've sort of looked into this building, and I think it is set for demolition later this year. But this has been like this since I was a kid, everybody. But before, this was actually a really nice building. And Sean Combs would walk right out of here, and I think he did a show, which I think this used to be Letterman, but now it's Colbert, obviously the Stephen Colbert show. But yeah, I mean, everything is totally vacant. You can see all the retail storefronts here too. Everything's blown out. But the good thing is it's set for demolition, and I would assume they would probably build some sort of mixed-use building with a very heavy focus on residential apartments. So we'll see. We'll stay tuned. We'll definitely be covering it here live. Yeah, Western Mass Dave says, Tom, how long has it been vacant? I mean, that has been vacant like that probably since before I started college. And that was, what, 2014? It's been a long time. It's been a really, really long time. Which is surprising because this is prime real estate right here, everybody in Manhattan. This is the Ed Sullivan Theater. So to have a building that looks that ratty right down here on Broadway going up to Columbus Circle, it's kind of weird. Let me give you guys another shot of it from here. We actually haven't walked down Broadway in a while, so it's kind of nice. So here's the building I'm talking about, right? It's on West 54th Street and Broadway. You have a brand new hotel that just went in right here. I think this is called the Residence Inn, one of the courtyards. Beautiful building. Hey, Matt Dykes is here. Good to see you. But check this out. You could actually see inside the building. Everything is vacant. Totally vacant. And I think it is scheduled for demolition later this year. We'll see. Let me read some of the chats. Hey, Dan Zhang says, Tom, my neighbor is an MTA cop. He was telling me that the homeless issue on the train is literally unfixable. When they got rid of them on one train, they would just go to another train. Yeah, I mean, maybe to your point, Dan, that's maybe a reason why people are choosing to not take the train. But I mean, for a person like me, I just walk, right? It's not necessarily the problems with the train, as everybody's been saying. For me, if I'm in the city, I just want to walk around. I want to, enjoy the sights and sounds of the city. That's just the kind of person I am. I don't know. We'll see. It's going to get interesting. Malcolm is here. Says, hey, Tom, can you now go to Brooklyn? I cannot. Maybe another night. But good to see you, my friend. Thank you for joining. This is the Ed Sullivan Theater, the Late Show. I'll give you guys a quick look at the building. Jimmy T is here. Says, good evening, everybody. Welcome. Good to see you, Jimmy. Russ says, this is why I love these walks. Nothing like this where I live. Well, you got to come, Ben. You got to come and check it out. Definitely more than welcome in New York. Adriana says, hey, Tom. Are you responsive on Instagram? I have something important to tell. But that's not for YouTube and not appropriate for your chat. Well, if it's not appropriate for YouTube and not appropriate for the chat, I probably don't want to receive it on Instagram, just to be frank. But just as long as it's not anything inappropriate, you could definitely share it with me or send me an email. But I would just have to pass if it's weird. Joan K is here. Good to see you, my friend. Thank you, Joan. Appreciate you being here. You know what, while we're here, let me show you guys the Sheraton. Let's see if they still have all the flowers up here. But, notice as we walk, you'll see all of these office towers, much of which are vacant and they have no tenants anymore. And to sort of piggyback on our conversation from yesterday, the city is going to be running into a pretty big issue with a lot of vacant office towers. So hopefully they could come to a resolution. I think Mayor Eric Adams is working on a program where they provide different incentives to developers and contractors to convert a lot of this, maybe Class B office space into residential apartments. They do have it up. Everybody check this out. This is the Sheraton, New York. This is actually a really, really nice hotel. I've actually stayed here before for work. And they've completely gut renovated the entire inside. So you have the restaurant, you have the bar and grill, you have a really nice lounge and seating area. And the gym is actually in this sort of circular thing. It's in the basement. It's very, very nice. Big, says Tom, they should increase the vacancy tax in Manhattan. I don't know if additional taxes is going to help the situation, but I'm willing to explore it. Beacon, New York says if you live outside Manhattan within New York City, most likely you need to ride the subway, which has issues. That's true. But again, like I said, a lot of people that I know, right, that live out on Long Island or live in New Jersey that do work in the city. This is Times Square right down here. They only have to come into the city 2 days a week. So they choose to drive and they just expense the parking, which is really putting a big blow to the MTA. Brad's Brain says, hey all, just watch my Iowa Hawkeyes lose in the first round of the NCAAs. Oof. Oh yeah, is March Madness going on now? It is March. I mean, I haven't really been paying attention to sports at all with all the craziness going on with bank runs and, wars. It's just been crazy. I gotta pay attention. Usually every year at work, I would fill out one of those brackets. Has anybody else done that at work? You have everybody chip in like $20, $50, something like that. And you put the predictions in the brackets. I think this is the first year I haven't done that. I completely forgot about it, actually. Now, speaking of Wall Street, we are now outside of the French investment bank called BNP Paribas. And some years back, there was actually a helicopter crash on the roof right here. Big says, what do you think about this week's big run in the NASDAQ? Well, it's a very good point. But if you think about it, it kind of makes sense, right? So today was actually a very, very strong day in the market. But what led this market higher was the NASDAQ. So if you think about the major equity indices, the NASDAQ, the S&P 500, and the Dow Jones Industrial Average, the NASDAQ was a clear outperformer. This is the Central Park Tower, by the way. But if we think about why, it kind of makes sense. And here's my thesis, and I'd love to know if you guys agree or disagree, and I want your feedback on this. But we have a couple things at play here. Now, we know what caused the major tech rout of 2022, right? Going in from 2021 to 2022, mainly the hiking cycle. So interest rates going up and the contraction of the Federal Reserve's balance sheet. That was a major factor in the, I would say, PE compression of a lot of these tech stocks. Because you got to understand, you know, these high flyer tech stocks were, and I would say the companies were really advised during the age of ZIRP, zero interest rate policy, to only focus on top line revenue growth at all costs, right? So if chances are, if you've ever worked in the SaaS space, so software as a service, or if you ever, you know, working at a startup, you would hear the terminology, you know, go after market share, just gain market share at all costs, but they were doing that at the expense of profitability. Now, I guess that's fine if money is sloshing around in the economy and money is very cheap, but as interest rates go up, the first stocks to really get hammered are these very high beta, high frothy tech companies, because again, if you're thinking about the present value of a company's future cash flows, they go down when rates go up, right? Generally speaking. So if you run your, you know, DCF analysis, discounted cash flow, a company's present value of their future cash flows will deteriorate and decline as rates go up. So if you think about what we saw today in the market, or I would say over this past week, interest rates got level, huge decline in rates. You know, look at the what they call the risk-free, or the benchmark, excuse me. Look at the benchmark 10-year U.S. Treasury. We were knocking on the door of 4% just Thursday and Friday, right? Last Thursday and Friday, the 10-year U.S. Treasury yield looked like it was going to breach 4%. It dropped all the way to 3.2% earlier in the week. It's since recovered. I think right now the 10-year yield is at 3.5%. Maybe somebody could check me on that, but I believe so. The 1-year Treasury just last week was 5%. I think 5.25%. Now it's 4.5%. So that has really helped out a lot of these tech stocks. You know, additionally, here's another catalyst that I would say that has been very bullish for these stocks. But first, I want to quickly show you guys again what I mean. Here is another example, okay, of vacant office space here in Manhattan. You can see it. 1, 2, 3, 4, 5 floors of office space completely vacant here. Look at that. Totally vacant. And this is right here on Avenue of the Americas, by the way, which is pretty much Wall Street. You know, you have Charles Schwab across the street, you have BNP Paribas, you have UBS to our right, you have Mizuho, which is a Japanese bank. But I don't know, what do you guys think about the rally in the NASDAQ today? Michael Josephs is Meta making a run. Wall Street loves the job cuts and new mission for not wasting money. Michael Joseph, you took the words directly out of my mouth for the second reason why I think tech got a pretty big bid and has been getting a pretty big bid. Because the technology sector specifically has been taking the full brunt of a lot of these layoffs in the market. Now, to Michael Joseph's point, Meta, which is formerly known as Facebook, recently announced another round of job cuts. So that's probably 11,000 jobs. Now, if you average the salary, right, average salary of a SWE, a software engineer at Meta, or a PM at Meta, you know, those are significant. You know, you're talking about hundreds of thousands of dollars as the salary. So that's all going to hit the bottom line. So as you have interest rates coming under pressure here, going down a little bit, and as you have a sweeping wave of job cuts in the tech sector, this may be pretty good for profitability, and I think people are starting to dip by some of these tech stocks. Hey, Barrington James is here with the very kind $2 donation. Says, hey Tom, it's been a minute. Hope all is well. Likewise, sir, thank you for joining us tonight. And thank you for your donation. You're very, very kind. Appreciate it. Hey, Lex S. Oh, I didn't hear about that. Somebody says they're closing Rikers Island. I don't know about that. Hey, Ryan Bex is interesting. Looks like risk on. Also, OPEX tomorrow, so who knows? Yeah, I mean, but if we, so let's take a step back. So to Ryan Beck's point, he says, looks like risk on. This is one of my favorite views down Avenue of the Americas. You could actually see all the way in the distance, you could see the World Trade Center. But it's kind of interesting because if you think about it, let me just get away from this guy a moment. Let's think about what happened directly after JP Morgan Chase made a bid for Bear Stearns back on this day, March 16th of 2008. Additional year, the market was 42% lower than where it was in its present day. So I'm not saying that's exactly what's going to happen, right? I think we just need to trade with the trend and follow the trend. But it seems as if, as of now, the market is taking this bailout. And if you look at the M2 money supply, by the way, everybody take a look at the M2 money supply. It actually expanded, right? And over the past 2 to 3 months, it's actually been contracting for the first time in 14 years, which has also been really, really putting a lot of pressure on markets because, you know, there's really two things that drive price. Number one, obviously, it's the earnings, right? We always talk about the fundamentals. But number two is liquidity. You need liquidity to really drive price. And as the Federal Reserve has been contracting the money supply and contracting its balance sheet, that has been ripping liquidity out of the market. So, look, I mean, we'll see. I think we're probably going to get some more clarity next week as the FOMC meeting rolls around. But with rates going down and layoffs ramping up in the tech sector, this could be a bullish catalyst. It's a good point. Hey, Malcolm, thank you. Malcolm says New York City looks great tonight. Thank you, Malcolm. Appreciate it. Hey, Chinook says stocks love quantitative easing. You're right. Yeah, you're right. It's a funny comment, but it's true. Chinook wins says Tom, stock markets love QE. A lot are seeing the bailouts as essentially more quantitative easing. Markets will roar, in my opinion, if the Fed pivots. If 25 basis points might be seen as the start of the pivot to many, me included. Yeah, I mean, it's definitely an interesting thesis there. Now, I'm actually under the impression, and this is Radio City Music Hall, by the way. It actually says tonight's sold out. Who's playing? Let's see. I'm going to butcher the name, but it says Radio City Music Hall tonight sold out. Keshi Hellenbach tour. Interesting. Well, that's cool. I mean, awesome. Sold out. And guys, so a little bit of anecdotal data here. Again, I just don't get it. I mean, I don't get it. Every time I walk past the hotel, every time I walk past the restaurant, well, let's actually check this restaurant. This restaurant's actually pretty fashionable. It's a Greek restaurant. They seem to be all packed. All this week, every restaurant in New York City was mobbed. I told you guys on Monday, I believe, I wanted to go to the Momofuku noodle bar with some of my friends. That was packed. We couldn't even get in. And this is on the week where we had a major banking collapse, and it seems like nobody really cares. Look, the restaurants are packed. Radio City Music Hall, the show is sold out tonight. Right, we have diners everywhere. The consumer seems strong, at least here in New York. Kind of crazy. Since we're here, we might as well check out 30 Rock. Hey, The Wizard, welcome. Good to see you. Yep, Captain Kumi, you're correct. UBS was on the right back there. Also, Mizuho was back there, which is a Japanese investment bank. Oh my God, isn't it St. Patrick's Day tomorrow? I think, right? Tomorrow's St. Patrick's Day? That's probably why they have the fountain all lit up in green. Let's see. Hey, Michael says leisure and hospitality is the only sector that has been strong because people are making up for the lockdown, says Michael Joseph. That has really been my thesis as well. You know, take a look at some of the hospitality stocks. Take a look at Hyatt, right? Ticker symbol H. Take a look at Marriott. When this whole banking debacle was going down, these stocks actually broke, and they broke really, really hard down through their 50-day moving average. But ever since the bailout, they're at least trying to make back some of their gains. But, you know, just from being observant, people are out, people are spending. It seems like nobody really cares. Kind of interesting. Hashi K is here, welcome. Thank you for joining. Joseph Hardaway says, Tom, mortgage rates should dip down to 6%. You think so? Well, I think right now they're about 6.5%, which makes sense because the 10-year Treasury yield moved about 50 basis points to the downside in 2 days, which is just a ridiculous move in the bond market. 407 says the big C disincentivize people to crisis. Yeah, maybe. Or desensitize, yeah. That's actually kind of an interesting thought. I mean, think about over the last 3 years, all of the BS that we had to put up with, right? I mean, I think it's caused us to have a pretty tough skin, right? Pretty thick skin. So maybe you're right. This is 30 Rock. You could see the Tonight Show starring Jimmy Fallon in the distance. And then we'll head off. Curious to see what Radio City looks like tonight. Or curious to see what Rockefeller Center, the ice skating rink, looks like tonight. Russ Lau says, do you think with the government bailouts that the banks will continue to make bad decisions? Well, so technically it's not a government bailout, right? This is the Federal Reserve essentially bailing them out, right? And the FDIC. So what a lot of people don't realize is the FDIC is funded via fees from the banks, right? Obviously in case of something like this, it comes into play. So technically speaking, right, taxpayers will not be on the hook for this bailout, right, technically. Now, I guess you could argue, well, Tom, if you're going to print a bunch of money, which the Federal Reserve is pretty much doing, right? If you think about quantitative easing, if they're buying the bonds, right, at par value, well, that is a form of QE. Hey, good to see you. Oh, good to see you. Have a good one. Take care. Take care. I think they were viewers. So if you think about what quantitative easing actually is, right? QE is essentially just buying a bunch of bonds. So if you're purchasing all of these bonds at par value from these banks, some people would argue that's inflationary, in which case the average consumer would pay the price for that. But I don't know. I think if think about how many employees Silicon Valley Bank had. A significant amount of employees. Those people are going to be out of a job. So this may be actually disinflationary, potentially, especially if other banks go under. So I don't know. I mean, I think Wall Street is pretty divided. Some people are saying, hey, this is going to cause more inflation. It's going to incentivize more bad behavior. But I'm not too sure. I don't know. Thoughts there? Do you think this whole bailout is going to cause a quote-unquote moral hazard? And if you think that, well, you're in the same boat as Citadel's Ken Griffin, because he thinks the same thing too. He thinks that Silicon Valley Bank shouldn't have been bailed out. He thinks it's a moral hazard. I don't know. Malcolm says, Tom, have you ever been to Radio City for a gig? Yeah, I've been there twice. It's really beautiful in there. Haven't been in a long time. I haven't been since COVID. Well, I should say pre-COVID, I should say. Hey, Natalie, what's up? This is good evening, Tom and team. Gorgeous night in New York City. The Empire State Building is lit up. In which color? Let me see. We're probably gonna have to walk down there. We're gonna go down there anyway. The Wizard says, Tom, when are you gonna be back on the skateboard again? Probably not anytime soon, to be honest. I mean, there's just too much traffic. Way too much traffic. I think it's a little bit of a hazard for me, but we'll see. Ryan Beck says, I'm wondering what the big banks that were part of the private side bailout today are getting in return. Well, I don't know. I really don't know. So are you referring to First Republic, right? So there was a rumor circulating around in the rumor mill that JP Morgan and Citi are going to make an offer essentially to buy out First Republic Bank. And I tweeted, I'd say that was going to be really funny because this would be the second time on March 16th that JP Morgan Chase would bought a failing bank. March 16th today in 2008, they bought Bear Stearns. Hey, Elizabeth Gill says, Tom, I'm here in Buffalo, New York, and same. All the restaurants are packed Thursday through Sunday. It's winter and you don't want to be stuck inside all the time. Oh, okay. Yeah, plus if you work from home, you want to go out and do things. I guess that makes sense. Yeah, Buffalo, I think you guys have what, two feet of snow I think you got from this northeasterner that came out? We'll head down here past the FAO Schwartz. Hey Mustafa, good to see you. All right, let's press on down here. Oh, another thing I wanted to bring up to you guys. I'm not sure if she's in the chat, maybe she is or not, but I forget. We do have a chatter that works in the semiconductor sector, the semiconductor industry. And if you want to look at the leader in this market right now, surprisingly, or maybe not surprisingly, depending on who you ask, semiconductors are really outperforming here. I think AMD was up 6% on the day, but the overall broader semiconductor indice, if you look at ticker symbol SOXX, that really led the market and took off. And I've said this, and I've sort of had this viewpoint about semiconductors, and I said, a new bull market will not start, in my opinion, in my view, unless you also have participation from semiconductors. And the reason why I say that is because if you think about the main drivers of the economy, in my view, over the next 3 to 5 years, it's all going to be technologies that require the use of semiconductors. Think about cloud computing. If you think about EVs, right? In the average electric vehicle, there's twice as many chips than your normal car. So the theory there is, if semiconductors are performing well, that probably means they're getting new orders. And analysts that are maybe covering NVIDIA, covering AMD, they're consulting with, maybe people who work at the company, they're probably expecting big orders. And that really doesn't seem so recessionary, does it? I mean, if you have outperformance by the semiconductor sector, pretty much every single consumer good that's going to drive the economy, right? Even from everything such as your phone, TVs, appliances, they all need chips. So there was huge outperformance today in the semiconductor sector. Any thoughts on that? Michael Joseph's SOX ETF crashed hard in 2022. It might have bottomed. Potentially. Now, usually the market is forward-looking by about 6 months. Usually 4 to 6 months. So the market's going to bottom and see through this crisis well before the actual economy does. So who knows? I mean, it's trading well above, excuse me, the 50-day and the 200-day. They're performing really, really well. Hey, Rat thinks my son-in-law works for AMD, and he's working overtime. Wow. You mind giving us a little bit more context on what he does? You don't have to, obviously, if you don't want to, for privacy reasons, obviously. But I'm actually curious. Hey, David, thank you so much for your very generous $2 donation. I appreciate it very, very much. Oh wow, Rat thinks he's a chip designer. That's awesome. Keith says my new AMD powered desktop is awesome, very fast, maybe as quick as my M1 Mac. Well, if that's the case, that's amazing and that's fantastic, because I also have one of the Macs with the M1 chips in it, and it's probably the best performing computer I've ever had. It's extremely fast. Hey, Elizabeth Gill says, Tom, by the way, your thoughts on stress testing for the banks, by the banks. That seems like, yeah, you could sort of say the same thing about big pharma, clinical trials, and the FDA just takes their word for it. Well, I think it comes down to the expertise, right? It comes down to the expertise of the people who know about, the financial industry. I don't know who else you would have doing these stress tests, so to speak. Now, there's been a lot of talk, to your point. If let's just stay on this topic for a minute. What Elizabeth brought up about the stress tests, that some of the smaller banks are not subjected to these stress tests. And there's many people, including some of the politicians like Elizabeth Warren, that have come on the mainstream financial channels over the last couple days saying, hey, if we didn't roll back a lot of the regulations and if we had to put every single bank through a stress test, well, this would never have happened. Well, maybe, but maybe not. And here's sort of my take on that. But really quick, this is News Corporation. This is the 1211 Avenue of the Americas. This is home to Fox News, Investors Business Daily, Barron's, and the Wall Street Journal. So here is my take in terms of the regulations. And before I say this, a lot of people may say, well, Tom, you're automatically going to be biased because you lean conservative and you're not a big regulations guy. Okay, that's a fair criticism. So I guess just keep that in mind as I'm talking. I think that's fair to say. I think that's a fair criticism. I've gotten a lot of emails like that, and that is a fair criticism. I'd take that as fair. But in this situation, there was really well, I'll phrase it like this. Every single bank across America, okay, has a boatload of these same securities on the balance sheet. Specifically MBS, or mortgage-backed securities, with long durations, right? And we sort of reviewed over the last 2 to 3 streams about duration risk and some of the different ways that you can, deploy interest rate hedging strategies to, run a normal bank in normal operations. So it's every single bank in America that has this because it makes sense. We're coming off 14 years of artificially suppressed rates. So if these banks are buying treasuries, mortgage-backed securities, which are the safest instruments, by the way, okay, after the 2008 financial crisis, the government actually prefers banks to park money in government-backed, mortgage-backed securities and U.S. Treasuries. Now, the problem why something broke is because the Federal Reserve cranked the interest rate hikes by about 400 basis points in less than 20 months. We'll wait till the FDNY goes by here. Hopefully everybody's all right. So when we think about a fractional reserve banking and a fractional reserve lending system like we have in the United States, theoretically and technically, every single bank is susceptible to bank runs, right? So if somebody spread a rumor tomorrow that Citibank is going to go under, and everybody ran to Citibank and started to withdraw their money, you would cause a bank run. It doesn't matter how well capitalized the bank is, because they really only have about 10% of deposits handy on hand. The rest you would have to start to sell different assets and securities in order to raise those funds. Well, here's the problem. The assets, specifically these mortgage-backed securities and these bonds that banks have been buying, you bought them when rates, in Silicon Valley Bank's case, there was the 90 billion of mortgage-backed securities at 1.5%. Now, if you hold them to duration, there's no problem. You just get your principal back in 10 years and you collect the interest. But if you're forced to buy, it's called a forced liquidation, you're going to have to sell it pennies on the dollar. In Silicon Valley Bank's case, about 60 cents to 50 cents on the dollar. So you're talking about significant losses here. So I really don't think the stress test would have done anything in my view. Okay, again, maybe I'm biased, maybe I'm not. I think the problem here was the really, really egregious management, really, really egregious duration risk that management opened the bank to. So I don't know, that's my opinion, but I'd love to hear everybody else's for sure. Okay, speaking of vacant office space, I got to point this out. I point this out every time. So this is 1166 Avenue of the Americas. This is my old office. This is my old home. I used to work here for many years. Really, really loved working here. But right in this building, above the Chick-fil-A, you guys see it on 46th Street. I used to sit here. That was my cubicle, literally, right here. Not that you guys care. But every morning I would come in the office, and I would look across the street, into this office building, and it was floors and floors of people. Everybody sitting in a desk. Since COVID, empty. This whole building empty. Everything is vacant. And I don't know if the company went under. I don't know what the company was or what they did, but I just knew that there was a ton of people in there because I would see them every single day. I would actually wave to the guy. We sort of knew each other, but we didn't know each other. We would just wave from our cubicles. But when the big C blasted us, and I came back maybe 6 months later to go back in the office when I got approval, totally empty. Cubicles were wiped out. Furniture was totally taken out of there. So I don't know if the company went bankrupt and, unfortunately it had to close, or to our point about the big troubles that it's going to happen in the New York City commercial real estate market, maybe they just went all remote. Maybe they're like, hey guys, work from home, no big deal. And maybe they broke the lease and they just told all their employees to work from home. Who knows? But that's going to happen a lot more than you think. Hey, Tiffany Allen, good to see you. Michael Joseph, welcome. Says everybody take notes from this situation. Have more than one bank account and keep everything diverse. I think that's prudent advice. I would say that's prudent. Wow, Ryan Beck says for some reason I didn't think Chick-fil-A was in New York City. I'm going to say something that's going to upset a lot of people. I don't like Chick-fil-A. Don't like it. Don't care for it. I've had it a couple times and I just don't think it's good. It doesn't even taste good. So hopefully that doesn't upset too many people. Malcolm says, Tom, Silicon Valley Bank was down to poor legislation. And now everybody suffers? Maybe. I mean, the debate is going to be nonstop about it, but I think a lot of people are making good points on both sides. All right, team, we have now reached West 44th Street, Avenue of the Americas. And check that out. That is the gorgeous One Vanderbilt building. Incredible building, incredible piece of art. Bree Graham says, Tom, watch for First Republic Bank to get acquired, not go under, but they are struggling. I think you're probably right, Bree. There was some breaking news today that it was definitely JP Morgan. I forget what the other bank was. It may have been Citi or Morgan Stanley. It probably was Citi that was going to make a bid for the bank, which makes sense. We'll see. I mean, just look at the balance sheets of any of these banks. They're all holding these long duration bonds. And again, it's only a problem if you're forced to sell, right? That is the whole thing. It's only a problem if you're forced to sell. And if you think about what a bank run is, well, that is an environment where you're forced to sell. So now I don't want to make it seem like I'm taking away from the responsibility of management, and I'm not, because this bank was in trouble, right? And this probably would have happened anyway, because if you think about the vast majority of the depositors at the bank, oh wow, check out the Empire State Building here. They were a lot of venture capitalists, as well as a lot of startups that had significant amount of cash burn. Right, so exactly what we talked about, right, as it relates to a lot of these SaaS companies, these software as a service companies, and not necessarily just those, but SaaS companies tend to have a lot of cash burn at first, right, as they're growing market share, but just startups in general, right? That is why a lot of founders raise money and venture capitalists back startups at first, because you're not making any revenue and you're trying to acquire market share and you're burning a lot of cash. The problem was the VC spigot really shut off in 2022. In 2021 it was a boom town, but in 2022 it completely shut off. So you had deposits declining because a lot of these companies were burning tons of cash, and they had to draw down on their account balances in order to pay employees and try to fund operations. But on the back end, there was no deposits coming in. Well, I shouldn't say no deposits, but you guys understand what I'm talking about, right? There was not a lot of deposits coming in because a lot of VCs weren't writing checks. So this probably would have happened anyway, right? And to a lot of people's credit in the comments, management did not take prudent risk management, so. All right, now we are at West 42nd Street. This is right outside of the Bank of America Tower. This is another one of the Wall Street mega banks right here. Hey, Teresa Diaz, TD, good to see you. Thanks for joining. Welcome. Hey, Main Street Moments is Tom. The city looks busy tonight. It really does. It really does. Now, Thursday night into Friday is usually really busy, especially now that we're in Midtown. If you look directly in front of you, this is actually Times Square, but we'll try to avoid that. It's been a long week. I don't know if I could handle Times Square. Oh, man, you got to watch out for the bikes. Jeez, you guys see that? That was close. Man, got to look both ways. Hey, Nina's here, says Tom. Ooh, another guy. That was 2 in a row that almost got clocked. Nina says everybody is out and about enjoying the end of the weekday. Very nice. Well, I mean, after the crazy week that we had, I think everybody needs a little bit of a break. It's almost like it was nonstop, because last weekend, I mean, let's face it, last weekend was kind of destroyed, right? I mean, is that fair to say? If you worked in finance, or if you worked at a startup or in tech last weekend, it was totally destroyed because of Silicon Valley Bank. And then on Monday, everybody was concerned that there may not have been a bailout, so I think everybody's really looking forward to the weekend. I'm looking forward to the weekend. I'm looking to relax at least 2 days. Hey, Main Street Moments, thank you so much for your very generous and kind $20 donation. It says, hey Tom, great vlog and conversation. Well, thank you, Main Street Moments, for helping us out and joining us tonight. I really appreciate it, and hopefully we'll see you back again very soon. Check this out, guys. I think this may dethrone a couple of the other color schemes on the Empire State Building. I've never seen this color scheme before in my life. I don't even know how to describe that. That is like an Avatar blue almost. Anybody ever seen the movie Avatar? Man, that is a really, really unique color. Let me try to get away from the tree here so you guys can see. Fred X is 11. This is definitely an 11 out of 10 right here. Elizabeth Gill says, I like it. Yeah, it's beautiful. Now, as you guys know, my favorite color scheme is the classic red, white, and blue. We're probably going to see that obviously in July, but hey, Justin S., do you think any place can take the title of financial capital in the United States away from New York? I don't think so personally, but maybe I'm a little bit biased because I am in New York. Now, a lot of people were speculating it may be Miami, Florida. Even though I do own property in Miami, Florida, I don't think so personally. I think Miami is going to be a place for finance in a more mature market. And what I mean by that is I think you're going to have a lot of the analysts, right? So if you think about a hierarchy of an investment bank, you have the analysts, then you have your associates, then you have your VPs, then you have your managing directors, the MDs, right? I think you'll have a lot of the, let's say, fostering of your career will probably be in New York, always. But as you move up the ladder, I think you're going to get more flexibility to work in other offices, and I think they're going to build out a lot of that infrastructure in Fort Lauderdale and Miami for some of the more senior executives, if I had to guess. However, guys, there was some breaking news. Jamie Dimon, and Ryan Beck is going to like this because Ryan Beck is a Texas guy. You know, Jamie Dimon, the CEO of JP Morgan Chase, was interviewed by Bloomberg. I think this was last week. It may have been 2 weeks ago. I mean, time is sort of a blur. Anyway, but he was being interviewed by Bloomberg, and he said that for the first time ever, JP Morgan has more employees based in Texas than they do in New York City. Now, is that just a total mind blower to anybody? I mean, I would have never thought in my entire life, this is a pretty nice view of One Vanderbilt, by the way, but I would have never thought in my entire life, if somebody would have told me, 6-7 years ago that there would be more employees of JP Morgan Chase in Texas, more employees there than in New York, I would have called you crazy. But Jamie Dimon made that decision, he says, due to political climate. New York is very expensive. There's high taxes, right? So not very business friendly. If you think about some of the other states like Texas, maybe Florida, it's starting to attract a lot more, more businesses, more employees. So I thought that was a little bit interesting. Russ Lauer says that's crazy, isn't it? I never would have thought that in a million years. I mean, you think JP Morgan Chase, you think Manhattan, right? You think New York City, you think Park Avenue. So am I a little bit butthurt about that? Yeah, I am. Yeah, Rat thinks is Texas, definitely less taxes. Speaking of banks, we have the Bank of China right in front of us. Justin S. says, I think it was the CEO of JP Morgan Chase saying he had more employees in Texas than New York City. Yeah, you're right. Now, here's the interesting thing, though. To be fair, and I've showed you guys this building a lot on the stream. Maybe we'll actually stop by it today. I don't know. Maybe we'll have time, maybe we won't. But Jamie Dimon's building a brand new office tower right on Park Avenue. I think it's 270 Park. And that thing is going to be a monster. That thing is going to be awesome. So I don't think the narrative that a lot of the banks are pulling out of New York, I think it's more along the lines they're trying to make a political statement to a lot of our politicians to say, look, we're moving around resources, we're moving around employees. We would much rather have them in New York, but your, politics and your taxes are too high. So I think they're, obviously going to always have a presence here, but they want to have a negotiating tactic, right? So, I mean, we'll see. But guys, remember, as we talked about at the beginning of this stream, it doesn't seem like taxes are going down in New York. Let's just say that. We talked about the parking permits that are probably going to go to fund the MTA, and who knows what other tax the city is going to come up with. Here's another really nice shot of the Empire State Building. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. Share the show with your friends. We do these streams about 7 days a week, starting at 8:30 p.m. Eastern, walking around New York, walking around Miami, and discussing the financial markets and having a chat with the team. A lot of FDNY activity out tonight. Hey, 44.6 is Tom. Bitcoin is almost at 26,000 tonight. What's your thoughts on whether it keeps moving up? Well, check out my Twitter handle. If you look at Walks Wall Street on Twitter, I posted a lot of charts today. As you guys know, I'm long. I do have an allocation. But I think it makes sense, right? If you think about the value proposition, especially nowadays, it's unconfiscatable money. It's the first time in history, right? And this isn't a glowing review to tell people to buy it. I honestly couldn't care less if you do or not. You know, there's a lot of what you call Bitcoin maximalists that try to go around convincing people to buy. I just am not interested, quite frank. It doesn't matter to me. Just as a disclaimer there. But if you think about the value proposition, at least for me, I like the ability to have a portion of my net worth in something that's unconfiscatable, right? I could really care less about the price of it, but to have something that is quite literally unconfiscatable that you could self-custody. Now, could you say you could do the same thing with gold? Now, maybe, but if you remember correctly, the United States did confiscate gold from the American citizens, and it's very hard to self-custody, right? It's kind of hard to self-custody gold and bring it through airports and, you know, bring it overseas. But, you know, with Bitcoin, in theory, you could move $1 million worth of Bitcoin in 30 seconds for less than 5 cents, right? So I think after what we saw this week with the Silicon Valley Bank situation, where many people, and I know a lot of people, I knew startup founders who had $17 million tied up in this thing, and they thought they were bankrupt. They thought all the money they raised was going to zero, right? I was dealing with that last weekend. And wouldn't they have a little bit more solace if they maybe put a portion of that in an asset that it doesn't matter if every single bank in the world collapsed? At least you have something of value to produce commerce and pay your employees. So I think from a standpoint, I think that's why you're seeing some price action or some volume move into Bitcoin and a lot of the precious metals too. I mean, gold is above 1900. You look at platinum, palladium, you look at silver, precious metals are doing really well. And I think it's just a testament to the flight to safety. So, I don't know, what are your thoughts? I want to know what you guys think, because from the comments in the chat, I think we're probably about split. 50-50 on, you know, if we think Bitcoin has any value or not. Maybe it'll go to zero, maybe it won't. But I think it has a value in that regard. You know, a first asset class in history that's unconfiscatable. That's value, at least in my eyes. Maybe not to some people, but to me it is. Hey, JM is here. Says my pops used to work there back when he was 16 in 1944. Wow, dude. That's insane. Oh, he worked at Radio City Music Hall. That's awesome, JM. Thank you for sharing that with us. JP says, but at the end of the day, most users are exchanging BTC for cash. Yeah, I guess at some point, right? At some point, for sure. But again, it goes back to having a medium of exchange that is different than anything else. I wrote a piece on this. I think maybe I'll send it out to the chat at a later date. But it's sort of like having a put option on the system. And in the hedge fund business, you call this like a tail risk strategy, right? It's essentially you pay a very small premium, and there's a very, very high probability you're going to lose all the premium and it's going to go to zero. But in the event that it doesn't, I mean, you could make ridiculous returns, generate a significant amount of alpha. So I'm sort of using it as like a tail risk event. And we sort of had that event happen, right? If the FDIC and the Federal Reserve, this guy's banging on the horn, if we never had the Federal Reserve or the FDIC and the Treasury get together and step in here, this could be a very different world this week. And I think we all realize that, right? If there was no decision being made, it's very possible that this world would be very different right now. So, hey, War Walkers. Speaking of Miami, good to see you. We'll be back in Miami soon. We'll be back soon. Let's cross the street here. Real quick, everybody, we're headed towards 34th Street, Herald Square. I think we'll actually cross back so you guys can see the Empire State Building. We'll just wait for all the traffic. Now, speaking of traffic, guys, is it just me, or is there way more traffic in the city tonight? It seems like the city is bumper to bumper. Bumper to bumper traffic today. Russ says, do you think we should be buying silver and gold? I can't advise on anything. You know, this chat's more just about conversation. I don't own any silver or gold. I own a teeny bit of physical silver that was gifted to me, which I appreciate very, very much. And I have like some sparse precious metals as collectibles. But I will tell you guys this, if gold breaks out into new all-time record highs, I'll have to get involved with that. Okay, let's do a poll. I think this will be an interesting poll, and then I'll tell you guys why I did the poll. How many people in the chat have a gross exposure to, let's just say, precious metals in general? And when I mean precious metals, I mean gold, silver, things like that. How many of you in the chat actually have an allocation to gold? Wow, check that out. That is an awesome shot of the Empire. Nina says nope. 446 says I do. Mr. Bagman says, Tom, I have physical gold and silver, 10% of my portfolio. Ryan Beck says not I. Mr. Fine Arts is family work with K Jewelers, and it is tripling right now. Wow. Austin City Limits says I don't. Elizabeth Gill says nope. Kevin Ramsey says nope, I was thinking about it. Hey, Daniel G from Buenos Aires, Argentina. Good to see you. Daniel, thank you for joining us. Trust you're well, man. Andrew Lee says, Tom, you should go buy some gold. Maybe. So it seems like the vast majority of us do not have any gold. Hey, John says, nobody does Empire better than Tom. Thank you, John. I mean, the Empire State Building looks gorgeous tonight. I think we could all agree on that. Regardless of if all the banks collapse, you know, at least this will be something to cheer us up. So it seems as if the vast majority of us own no gold. How many of us in the chat have an allocation to Bitcoin, or at least or own some Bitcoin? I'd be interested to see. Let's see if more people in the chat own BTC than physical gold. And this is actually kind of bullish, right? If nobody owns gold and it's trading near all-time record highs after consolidating for 14 years with all of the fundamentals aligning, I think that's actually pretty bullish. Okay, everybody's saying nope. Russ says I do. Austin City Limits says no, never, not touching it. MK says not touching that. Wow, almost nobody. I did not expect that. John says nothing. Nancy says I do not trust Bitcoin at all. It's actually very interesting. I didn't expect that. I didn't expect that. Okay, we got one person. We have one person. Square Bet says I own a little bit of Bitcoin. Diamond Dave says yes. It's interesting. It's definitely interesting. You know, I mean, That's probably been the one, I would say, the most common criticism, right? A lot of people just don't trust it. They don't trust a cryptocurrency, and I get it. E. Smith says you have a small amount. You know, maybe we'll go all the way over to First Avenue. We haven't been over there in a long, long time. I think there was a Rangers hockey game that just let out. Tons of people walking around in Rangers gear. Daniel G says, no gold, no banks in my portfolio, just techs, manufacturers, and food companies, says Daniel G. Well, your portfolio is probably doing pretty well over the last week. We had a big rally in tech. The Qs actually had a really good day. I think the Qs were almost up 2% on the day. Which makes sense because yields are significantly lower, right? Bond yields got hammered across the board. Greg says, what about Ethereum? I don't own any. I used to own a little bit, but I do not own any. I don't trust it. Just like many of you don't trust Bitcoin, I don't trust Ethereum, and a lot of people disagree with me on that, but I guess you could consider me a maximalist of Bitcoin. Hey, Tariq, what's up? Says, I am big on oil, over 68% down the past week. Oh, I hope you weren't long. You know, let's talk about catalysts for a sec, because Tariq made a good point. And I don't think we talked about oil. If you want to talk about something getting bombed this week, it's crude oil. Check out ticker symbol CL, that is the ticker for the light crude oil futures contract. This thing's been getting hammered every day relentlessly. And if you fast forward back 3 or 4 weeks ago, I had this I would say narrative or thesis. I would always say, look, I'm bullish a lot of the oil stocks. I said, I think this oil trade, this energy trade is getting a little bit long in the tooth. And sometimes there just needs to be something, a catalyst, to really break and blow it wide open. So if you think about March of 2022, we were doing the live stream. I remember exactly where we were. We were literally on the corner here at 5th Avenue, right at the Empire State Building. And crude oil was ripping. Everybody in the chat was talking about it. I think Goldman came across Bloomberg that night and said oil is going to $240 a barrel. And I said, that is the top. I'm like, we are done. That's it. This is the blow off top. Crude oil is going a lot lower. And it went from 130, and now what are we at? 68? And I guess it makes sense because if you have all of these layoffs, right, in tech and all other sectors too, then you have a huge full-on banking crisis. Silicon Valley Bank blows up. Silvergate blows up. Another New York bank blows up. You don't think there's going to be more contagion there? I think that's going to, in and of itself, slow the economy pretty big. But we'll see. So if it doesn't, I think crude oil is probably going to rebound, and maybe potentially, we'll see, could it be a good buying opportunity? But if nobody, again, let's just go back to the Peter Lynch style. Look around you, right? We just walked through New York City. And everybody was out, including these guys in the car stuck in traffic. Oh no, I don't want to give you near these guys. Oh, very nice, very nice. Including those guys, right? You know, you have everybody out driving their cars. That's significant demand for crude. But if people are going to be laid off and unemployment spikes, you know, maybe that's the market forecasting a huge spike in unemployment. We'll see. I don't know, but I wouldn't be long the XLE here. That's just my personal view. I don't know. Anybody think that this major sell-off in crude is going to be a pretty big buying opportunity? Hey Nina, good to see you. We'll try to cross here. You know, maybe these buses are for some hockey team. If the Rangers were playing tonight, that means obviously somebody came in from out of town. Clara W. When was that? That was many, many moons ago. When was the last time I was in college? 2018, I think. 2018, class of 2018. Dan Zanks says, Tom, no major sell-off could top the day when oil crashed to negative 40. Dude, I remember that too. That was nuts. And I think a lot of people got stuck with that too, because if you think about a futures contract, you have to take delivery of that oil. You guys do realize that, right? So if you're holding a contract to maturity, they will bring the oil to your house. So just a little bit of an FYI there. All right, one more look at the Empire because it's so gorgeous tonight. Oh wow, Clara W says, I'm graduating in May. Well, hopefully you find your way to New York. That is fantastic. Congratulations on your success. That is amazing. Kevin Ramsey says, I can't wait to visit New York. I can't wait for you to visit either. Now, I think if we continue to walk all the way to First Avenue, it's the Children's Hospital. And outside of the Children's Hospital, there's this really cool, I guess you could consider it statue or monument. It's like this Dalmatian dog, and on the top of the dog, it's a taxi. So the dog is balancing a taxi. We'll see if we can find it tonight. Hey, Dan Zanks, Tom, I think a group of proprietary traders made $660 million on that day, shorting oil. I wouldn't doubt it. A ton of people made a ton of money, especially people who were running those tail risk portfolios. One of which being Bill Ackman, right? Speaking of Bill Ackman, his hedge fund Pershing Square owns swaps on the S&P 500. And I think made, what, just under $2 billion on that trade? Here's another cool view of One Vanderbilt. You know, as we head over to the east side, it's going to be a lot quieter. Ah, Clara, you're a New York City native. Very nice. Even better. Even better. Where is Bitcoin trading at? I'm seeing a lot of chatter. Bitcoin 26,000. Wow. So I think at 30,000, I got to sell down some of my stake. Because you got to understand, when you're managing a portfolio, right? And the way I think about Bitcoin is I only want a percentage of my net worth in it, right? A percentage of it. So as we have these meteoric rises, right, in the asset, I got to sell it down, sell it back down to its allocation. So that's good news. However, I do have some that I will never sell, sort of as like a hedge to the world ending, which almost happened just last Thursday. This is the MetLife building in the distance here, really beautiful. This is Park Avenue. But if you look that way, that's downtown towards Madison Square Park. Mr. Cole says, why does it seem like you're walking super slow? I don't know, maybe I'm tired a little bit, walking a little bit slow. I know. A lot of people are saying I really miss when it was over 50K. Those definitely were the days, man. Now, I think the only major piece of economic news that's going to come out tomorrow is we're going to get consumer sentiment data, right? So we're going to hear from University of Michigan as they release their consumer sentiment report. But I'm so impatient. I'm actually looking forward to the next UMich consumer sentiment report, because I want the consumer sentiment data that includes the massive Silicon Valley bank collapse. So even if we have an uptick in consumer sentiment, I'm just going to totally discredit the report tomorrow, because I think you had a fundamental shift in human psychology over last weekend with all these banks collapsing. But then again, maybe to contradict myself, I mean, what did we see tonight? I mean, the city was packed. But if I had to guess, I think due to the collapse, a lot of consumers are going to start to put off a lot of their big name purchases, because I think this freaked them out a little bit. So if you think about, new home purchases, if you think about existing home sales, this may continue to fall under pressure a little bit. Here's the Chrysler building. We're on the corner of 34th Street and Lexington Avenue. It's a gorgeous shot of the Chrysler. Yeah, Mike C., they send out a poll. It's conducted by University of Michigan. Now, a lot of people say that it's not, they don't really take much credence in it anymore, but I think it's still pretty important to gauge overall sentiment. I think it's still important. Greg says US dollar down. That's surprising, because over the last 2 days, the Dixie actually had a pretty nice bid. There's a pretty nice bid in the Dixie, actually. Where is Dixie trading at now? 104? Elizabeth Gill says, I already have. I am in budget mode for sure. I think a lot of people are. I mean, even quite frankly, I think the weekend spooked a lot of people, myself included. Definitely did. And remember, I'm not sure who put this in the chat last night, but if you look at the data, consumer, I would say, household debt. Look at all this trash. Consumer household debt just reached an all-time record high. So I would really, really focus on paying down high interest rate debt. I would really attack that with everything I got. Because as rates go higher, and if I'm a betting man, I'd say next week we're probably going to get 75 basis point rate hike. 25 basis point rate hike. Excuse me. Lex says, Tom, I still think Memorial Day weekend travel will be one of the highest registered. Well, I predicted that about the holidays. Does anybody remember that? Does anybody remember my prediction about Thanksgiving and Christmas of this year? Which actually didn't come true, by the way. We forgot to talk about that. Now, my thesis was that this holiday season was going to be the most traveled in history. It actually didn't turn out to be that way. The reason why I thought that was because over the past 2 years, the government has locked us down in our homes, and we can't go see our families. There's a lot of people that were uncomfortable doing so. You don't want to go to your grandma's house or grandfather's house and in fear of spreading the virus, right? Which I think is warranted. But this year, pretty much all gloves are off. People want to travel. People want to get out. But it wasn't. It wasn't the most traveled holiday season. Greg says consumer is soon tapped out, and that means recession. I mean, maybe. I mean, that has been my thought, but then again, I mean, the resiliency here in New York and Miami is just insane. I haven't seen anything like it. Hey, Lorraine says, hey, Tom, I enjoy watching your New York City walks and listening, almost like being there again. Hey, well, thank you. I appreciate that. Hopefully you'll be able to come back and visit us here in New York. All right, we're almost all the way on the east side. You guys are going to be able to see this interesting transition here, so I guess I'll quickly point it out. Take note of all the original buildings, right? These are, you know, older buildings from the 70s and the 80s, right? Sometimes even way, way before that. But as you really cross over 3rd Avenue over to 1st Avenue, notice what you'll see. Almost every single one of these buildings is a brand new development. These are all brand new. And you guys are going to see this especially as we head down by the hospital. There's some amazing buildings. Here's a brand new one, right? It says studio to 2-bedroom condominiums. This one is brand new. You could actually see some of the vacant retail space. But the further east we go, you're going to start seeing more of this. And all this area used to look like this. You know, these original, I guess you can call them like railroad style, with the original fire escapes. But now there's tons of new development. Tons of new development. Hey, FredX says New York City and Miami are very wealthy cities, so yeah, people are still going out to dinner. That's a good point. That's a good point. There's a lot of wealth in New York, there's a lot of wealth in Miami, so maybe that's skewing it. I don't know. I mean, we have, what, like 750 people in the chat right now? How many in your cities? I'm sure not everybody's from New York or Miami. How is the consumers holding up in your cities? Right, I think we heard from Buffalo, New York. Said consumers are still spending, but what about everywhere else? I think that's some interesting data. I think FredX points out an interesting point. You know, New York City and Miami are kind of outliers. There's a lot of wealthy people here, so maybe that's skewing a lot of the statistics. Oh, here's another one. Speaking of new development, look at this. So again, you went from all of these original buildings here. John Silva says, Tom, I'm from Tampa, Florida, and Tampa is still spending. And then you went to these brand new developments. Big Blop says Arizona is going nuts. Delia's Lifestyle says, Tom, Memphis, Tennessee is doing good. Well, a lot of people moved to Tennessee during the pandemic, right? Hey, Jimmy Chung, what's up? Says, hey, Tom, restaurants are still busy in Toronto, Canada. Well, that's another place I gotta visit. I was actually supposed to go to Canada before the virus and then, you know, shut down the world. But that's good to know. Toronto's another very wealthy city, though, too. You know, Toronto is a big epicenter for finance, for tech, a lot of innovation. Toronto is a very, very wealthy city. Hey, Ivan says, greetings from Buenos Aires. Good to see you, Ivan. Thank you so much. This is the Queens Midtown Tunnel. So this is the main entrance to the Queens Midtown Tunnel. That'll take you, obviously, over to Queens. I'll quickly stop here. You can see the contrast between all of the original buildings here. This is now 2nd Avenue. You can actually see the top of the beautiful Art Deco Chrysler building in the distance. Michael Joseph says that retail stat is New York City lost almost 800 chain stores like Dwayne Reed since 2019. Well, I think we heard on the earnings call, I was actually on that call, Rite Aid, the CEO of Rite Aid comes on the call and says that they were forced to shutter almost all of their Manhattan stores due to the theft, due to the retail theft. I think the terminology is shrinkage, I believe. And you know, it's another good point. Chances are, if you've ever been to a drugstore here in Manhattan, the vast majority of the products are behind like not a glass, but like a plastic, and you have to call the customer service professional to unlock your goods in order to get it, because there has been an uptick in theft. Now, I don't think that's exclusive to New York. I think a lot of big cities around the country are seeing the same thing. I don't think it's exclusive. I mean, I think you're seeing that in all big cities across America, but you're right, it is an issue for sure. Ben says, Tom, I'm located in Pittsburgh, and Pittsburgh seems to be doing all right. That's another city where I want to go. Pittsburgh, Pennsylvania. Now, Pittsburgh, Pennsylvania is not too far away from that big train derailment. Is that correct? Maybe about an hour drive? Or am I thinking of another city? But yeah, I think Pittsburgh is only about an hour away from what, East Palestine, Ohio? Where the, what is it called? The major train derailment? PLA 30 says yes. Yeah, I hope that doesn't affect the water there. That freaked me out a little bit. It's sort of fallen on the wayside at the news, so I don't know what's going on with that, but it's 1 hour southeast. Okay, well, hopefully that's contained. All right, so we've arrived. This is First Avenue. This is the NYU Langone Medical Center, and you'll see what I'm talking about. You see the dog balancing the taxi cab on its nose? You guys see that? This is the main campus. This is the Children's Hospital entrance. I mean, if you want to talk about angels on earth, the people who work here, I mean, you can't get better people than these people. Look at how unique that is. They probably did that for the kids, you know? It's so heartbreaking to know that there's kids in here that are really sick. Well, that's kind of cool. Somebody says, is that a full-size car? It looks like it, yeah. Maybe about a half size. So here we have the East River. You can get on the FDR Drive. You could also take the water taxi from here too. But there's a really nice building I wanted to show you guys. Obviously, you could see One Vanderbilt all the way from here. Really nice. That is massive. Let me see if I could take you. We'll go this way. I think it'll be a little bit easier to navigate. But I'll show you some of the new developments that are being built down here. Well, many of them are already completed. Now, the good news is, well, I should say, not really good news, but before the 2nd Avenue subway, not a lot of people really wanted to live this far on the east side. But now that a lot of these new developments are going up, you have the 2nd Avenue subway, and in addition, the views are probably insane. Because obviously the further away you are from Midtown, the better your view is going to be. So it's almost as if you're living in Long Island City as it relates to the views, right? So here's another good example of the new developments. Check that one out. The views of the Empire State Building, the Chrysler Building, One Vanderbilt, and let's see, I think this building's probably just tall enough where you could probably see World Trade Center too. So the further you are away, just for some perspective, there's the Empire. Further you are away, you're gonna have a really, really nice view. But it does get very cold here in the winter, especially on the east side and all the way on the west side too. Tariqan's is best sushi restaurant in the city these days. Now, I don't remember the name, but I can tell you where it is. So, it is right at 59th Street, Columbus Circle. It is really, really good. If you just Google sushi 59th Street, Columbus Circle, it's gonna pop up. It's one of the best in the city, in my view. I'm trying to think of the name. I'm totally blanking on it. But that one is very good. It is right as you're walking to John Jay College. It's right there. Hey, Penelope is here. Speaking of Tennessee, good to see you. Yeah, Becky D, you're right. It's kind of heartbreaking to think about it, but the good news is New York, especially Manhattan, has some of the best hospitals in the world. Right? We have the best medical care in the entire world here, so here is an example of the new development I was talking about. This is American East. Brand new luxury condominiums. I think there's a swimming pool here as well. Depending on which side of the building you live on, you probably have sweeping views of the East River too. Parking in the building, which is really, really nice. You have a coffee shop in your building. Sort of looks like an interesting cafe. We'll check it out. Wow, this is a good spot. Brand new building. It's completed in 2021, I believe. You can enjoy a beautiful coffee as you're looking at the Empire State Building. Really cool cafe. They really made it nice over on the east side. This did not used to be like this, by the way. Not at all. I would definitely live here. And from your apartment, you could actually see the Pepsi-Cola sign in LIC. So you have beautiful views of Queens. You have the water taxi right here. I mean, this is a really, really convenient location. Now, I think the only downside is the highway, right? Imagine all the street noise there, but I would assume the developers probably made, soundproof glass throughout the entire thing. But this is a really, really nice space. And you actually have a bridge that connects the two buildings. It's like a sky bridge here. Very cool. And it looks like the units have very big windows too, very spacious. Those are probably, what, 10-foot ceilings, maybe a little bit more, maybe 12 foot. Unobstructed views of the water. That's really nice. Here's another look at the cafe. It's called Hole in the Wall. Hey, Joe C is here. Good to see you, Joe C. Really nice public space. That was what I was thinking, guys. So I think on the sky bridge that connects the two buildings, that's your pool. Imagine how nice that would be in the summer to have a pool on top of your building like that. That is very, very unique. And if I had to guess, this is probably not seating. This is probably a fountain. So during the summer, this is probably really, really nice looking. They probably obviously have it shut down now because it was just below freezing. But this looks like some sort of a fountain here. Somebody says, I wonder what the rents are. I would guess the floor is probably $3,500. I would guess the floor is probably $3,500. That's probably for a studio. I mean, this is a really nice building, guys. I mean, look at the library in here. Everything is brand new. That's what I would guess. I don't know, what do you guys think? From seeing the outside, right? Knowing it has a pool, probably has multiple gyms, you have a gorgeous view of the Empire State Building. I don't know, what would you say the floor is for like a basic studio? My guess would be $3,500, I'd say. Hey, Deep Value Alex says, love the walkability in New York City compared to other big metropolitan cities. Urban sprawl does take a toll on development planning. You're right. Wow, Brian, you say 1,700? I don't think so, man. I really don't think so. I wish. If it was 1,700, I'd rent it tomorrow. I'd rent that tomorrow. I'd be in there. Deborah says it's 4,000. I could believe that. Brand new building. You got to factor in all the amenities too, everybody. Tiffany Allen. All right, team. Well, I think we will cut you loose right here. I think we had a good conversation tonight. We really talked about the big broad-based rally in technology stocks. We also talked about the bond market. Now, keep your eyes on the bond market as we go into the final trading day of the week. This is very critical, right? It's not so much what the stock market does. What's more important is those big movements in the bond market. Tomorrow, we'll be talking about the University of Michigan Consumer Sentiment Index that comes out. And maybe, just maybe, we'll be able to walk the East Village. We haven't been to the East Village in a long time. I think you guys would enjoy walking around the campus of New York University, as well as St. Mark's Place. I haven't been there in a long time. So I want to thank you all for coming out tonight. If you enjoyed the stream, feel free to leave a like on the video. Click the subscribe button. If you're new, share the show with your friends. And if you want to join us tomorrow, come back at 8:30. We'll be here to tee up the financial markets, to have a good conversation, have a couple laughs, and walk around this great city. So everybody, enjoy the rest of the week. Finish strong. It's Friday. We made it, thank God, after the crazy week we have. So Solo Flyer, thank you so much. Steph UH, Hawaii, I appreciate you very, very much. Nina, thank you for coming out. Mohammed, as always, appreciate you. Joan K, Austin City Limits, Michael, Joseph, Deborah, John, Abdullah, Cloud Numbers. Hey, Shadow Stock, very good follow on Twitter. If anybody wants a new follow on Twitter, very good. Shadow Stock. 3T3, Deep Value Alex, EBITDA, Justin S, Joseph Hardaway, into the Mighty Bull. Have a good night wherever you are, because there's always a bull market somewhere. You just need to know where to look. Finish the week strong, everybody. I'm wishing you a very happy, healthy Friday, and enjoy your weekend. We deserve it. It was a living hell this week for most of us. Finish strong, always stay optimistic, and I'll see you guys back here tomorrow. God bless.